I would just say really talk to the people, think about it, ask clever questions, educate yourself beforehand, and not get maybe too excited. Do get excited, but do get excited with a thinking hat on, about who you give what of your equity away to.
Hi, Mona, and welcome to Ledger Nation. I'm very happy to have you today. Mona, you are ex-chief of staff at the digital bank Nuri, and now you're investment manager at Tokentus. And I'm so happy to have you here talking about venture capital. Welcome.
Thank you very much. Very excited to be here.
Great, Mona. So tell me, how did you decide to start a career in venture capital for blockchain companies?
Yeah, that is a good question. So, to be honest, I did an MBA in 2020, and I joined the MBA program with the goal of going into venture capital because I really thought it would be a very interesting way of combining my previous experiences in a strategy consulting and an entrepreneurial space. And I thought that, would be a very nice bridge. So I did the MBA in order to learn more about financial services and join a VC firm. However, throughout my MBA, I learned more about the blockchain world, about cryptocurrencies, and I thought that would be an extremely exciting space to join and to work in and to just immerse myself in. So I instead, after my MBA, started working for Nuri, which also has the crypto exchange built into their neobanking functionality, and was able to, learn a lot about the blockchain space, work with a lot of people who have been in the blockchain space for a long time. And then actually at the beginning of this year, decided to combine those two passions after getting the experience at Nuri for a year and join a VC fund called Tokentus, which is specialized on blockchain technology investments. And yeah, I joined them as an investment manager, and now I'm looking for cool new startups, and really have to say I'm very, very grateful because I got to combine both my passions. And why blockchain? Maybe just to answer that in one sentence specifically, I really think it's the future. I really think we're looking at a very incredible new technology that will change so many things that we know. And I think that it's going to change it for the better in a lot of instances. And I just think it's insanely exciting to be part of this movement.
Absolutely. I can hear your excitement from your voice and your passion. That's the best thing, to work something you're passionate about. So Mona, tell me, this space is pretty crowded right now with companies, with a lot of startups, with a lot of people starting a company. How do you find companies to invest in?
Yeah, that's a good question. So we kind of use three different paths. Firstly, it is through co-investors. So we are quite a small fund, so we never actually lead the investments ourselves, but we have a very strong network of other venture capital firms that are a bit bigger, have a little more assets under management that we work with and that we co-invest with. So that is quite useful because therefore we share deal flow and find investments through that path. Secondly, which is my favorite or preferred path, we go to conferences, meetups, hackathons, and actually speak to founders, to ideators, to innovators about their ideas, about market trends, about their understanding of where the market is heading, and identify really phenomenal teams, great ideas, and hopefully are lucky enough to get to invest in them. And then thirdly, people reach out to us. So we do get a lot of people that reach out on, for example, LinkedIn, or send me an email, or other paths that they find through Telegram or anything like that, because in the crypto space, it's a little less formal, I think, than the traditional VC space. it's also an interesting way of finding startups, because I guess, if I'm interested in the idea, and if I'm impressed by the outreach that they do, then often we set up a meeting, and then we also have Zoom chats like you and I do now. So yeah, we're actually quite lucky, and we have 3 different ways of speaking to and getting to know the new innovators of the future. So it's pretty cool.
Great. And I know that you went to Denver recently. You just came back from a very large conference where you met a lot of startups. Can you tell me a little bit from the real life experience, how it is on a conference like this, how you meet them, how do you talk to them, how you remember them?
Yes, it is interesting because essentially you meet a lot of people, right? So I was just at the Ethereum Denver conference. I was there for 10 days. So, it's a lot of talking, a lot of meeting of people. Very exciting because there's so many impressive individuals from the blockchain space that attend this conference. But of course, it's quite hard to remember everyone. So
Yeah.
something that I learned there, which I thought was actually quite cool, is that you often exchange Telegram rather than something like LinkedIn. Which, to be fair, me as being a bit more old school, coming from a traditional, consulting background, I often just exchange LinkedIn, right? Or even business cards. I know I look quite young, but I still was working when business cards was the normal way of connecting with people. So essentially we ended up taking pictures and sending the picture into a Telegram chat to be able to remember who you've met. So I have a lot of interesting, quite funny pictures with startup founders or other venture capital investors or just innovators in the space on my phone that I've met throughout the time. So it's actually a quite nice way of making memories too.
Yeah, I imagine going to a business meeting with a new client and saying, "Oh, let me take a selfie with you, and then I'll send you in the group chat just to remember who I am and how I look like." That would be,
Yeah, pretty much.
yeah. And Mona, when you receive these pitch decks and these pitches, how do you actually decide in which startup to invest? What do you
Yeah.
look at?
Genuinely, I would say, depending on which VC you talk to and which stage they invest in, they would probably give you a different answer. So I'm going to answer in a sense that we look at seed stage or Series A startup. So we don't look at the super early ones. However, I often also get in contact with the super early ones. So of course, also I evaluate them to ensure that maybe I can stay in touch with them once they are a little bit further along in their progression. Or I really believe in connecting people and, just sharing the network. So often I also forward them to other venture capital funds or accelerators that I know that are really good, that may be beneficial to that specific startup. So in general, what I look for, the very first thing is really, and I know a lot of the time you read that, but it is really true, is the team. Who is the CEO and founder? Who are his or her team members? How did they get to where they are now? Are they doing this full time, or is it kind of a part-time gig alongside a million other roles? Um, what is their strategy and their background for this venture? Because that is very important. Because I think sometimes you have someone with a good idea, but they are also an advisor, have a full-time role, do XYZ. And that's fair, because I did the same when I did my startup. I started out literally having 2 other roles. So I totally understand being in that space. But if you're really serious about something, specifically in the crypto space where there's so much going on right now, and it's just so fast that you miss out on a lot of things if you're not really 100% ingrained in what you do, then I think it's quite important that you're dedicated and to your idea and really believe in it. And we look for that track record and also conviction of the founders. We, of course, also look at the market potential, right? So how big is the market for that idea? And is it the right time for that product or service to be launched into the current landscape? Or is it something that may be too innovative and might not be ready yet? We might not be ready yet for it.
Yeah.
So that is, of course, also important, because as a venture capital, you also need a return at some point on your investment. And you want to have that, and you help and you support, and you're there for the startup, and you believe in them. But of course, eventually, that's how the business model works. So we do need to see some sort of possibility of the startup, expanding and growing and making revenues. Um, we do look like at the competitive market. So how competitive is the market already? How many players are there? Are there big players that have a very large market share already, so that there might not be so much space for another player? And if that is the case, of course, that doesn't mean that we don't back startups that are kind of maybe copying something. But what is the differentiating factor? What is the USP? What makes that startup better than another idea or a more established player with more money already in the bank, meaning more marketing, etc.? So it's really important to also clearly convey the USP of your startup, because otherwise, if it's very competitive, very saturated space that you want to play in, it's hard to justify, right, bringing in another player, unless it's something special, or that player has something special. And then, of course, in the blockchain space, we do also look at the technology and the tech, right? We do look at, are there engineers already involved, or is there going to be a big scramble for talent? Who's involved already? Has the product already been built? How robust is the technology? How secure is it? Which blockchain is it built on? Why? All those things are quite important for us to analyze as well, to also potentially help and give advice if we have a different opinion on the trajectory of the company, or if it's paired with a specific blockchain because of a grant that was received beforehand, which is also often the case. Then there's also a question around, is this the right partner for you, right? And if we say yes, then great. But if maybe it's not, then there's also a question around, do we need to take a few steps back and see if we can set up our business model or our partnerships a little differently?
Some blockchain layer one solutions offer grants to startups to build their solution on them, and the danger is that they just take the money to use it for the startup, but maybe that's not the right blockchain. Yeah, that's a very interesting perspective. I haven't thought about that. Yeah.
Yeah, so I mean, there are a lot of grants out there, and if you are a startup founder and you're watching this, it is a very, very, very cool way to get access to network, to grants, not having to give away equity in your business a lot of the time. So it is a great source of funding to explore. Just make sure that you know why you're choosing the blockchain, the layer one that you're choosing to build on, or can you maybe partner with a few of them? Is that okay, depending on your business model and idea, in order to have more network, more grants, more exposure? Or is it really going to be focused on one specific blockchain? And then why? What is your conviction for this blockchain? Because you need to be able to pitch that to a venture capital fund like myself in order to say, I did a deliberate choice in taking a grant for this particular blockchain to build my business on.
Yeah, absolutely. And maybe it's the same decision when going for VC, why do you pick this certain VC and not someone else? Because in the next funding rounds, probably you have to also explain this. Who have you partnered with in the past and why?
Yeah, absolutely. And a really good and important thing, and I think one of the things that I really like about the fund that I work in as well, is that you should pick a partner, a venture capital fund that is a partner to you, right? And that will also invest in you in your following rounds, so that you end up having someone that dedicates their time and financial resources into your startup throughout your growth. And I think that's really important because it signals not always so well if none of the previous investors you chose decide to reinvest or keep on investing in further funding rounds of your startup. That could have a variety of reasons, but of course, in the first instance, when you look at it from the outside, you're wondering, why are none of the backers of previous rounds coming into this round? And I think so when you speak to venture capital funds, you want to make sure that they don't just have excess money and don't really know what you're doing and how they can support you, but really also ask, what can you do for me besides the capital? And do you do follow-on investments? And maybe also, do you do token round follow-on investments, not just equity all the time, right? So when you grow, you might prefer to do more token rounds instead of just giving away more and more of your business. So all of these factors, I think, are super valuable for you to explore with the VCs that you pitch to, because you want to keep control of your baby, I would say.
Yeah, absolutely. Oh, thank you for this valuable tips. It's very important, of course, as a founder to know who you pick along the way to basically to be married to, it's like a marriage. And because you said how important it is to be in this partner relationship, can you explain to us, when you invest in a startup, what do you do for the startup after the investment round?
Yeah, so we're a very small fund, so we don't have as many resources, sadly, as other funds. However, we're really, really, really working on it. And I think the investment management team super dedicated to help the startups. So one of the things that I personally really try to do, I mentioned earlier, I really believe in connecting people. So my approach really is to talk to the startups and say, what do you need? Where are your roadblocks? Where is maybe a knowledge gap, right? Or an experience gap? And how can I help to fill that? So maybe it's talent. Maybe it's not having access to the right talent. It could be engineering, but it could also be marketing, operations, leadership roles, whatever it may be, right? That is often a factor that somebody who has a very large network, and I do, but also my other colleagues do, and our LPs do as well, so that we can then help and find talent, or maybe even the right recruitment contact, whatever it may be, right, for that particular startup. But then also it could be something like marketing opportunities or PR. It could be leadership, or just a difficulty in making decisions because it's the first time founding experience. It could be wanting to do something a bit larger. So one of our portfolio companies, for example, they're based in the United Kingdom, and they wanted to essentially have the ability to offer banking services in Europe, specifically in Germany. And our network is very strong in the traditional banking space because our LPs are or many of them are coming from the German traditional banking space. So we were able to provide a contact to a German bank that was acquired then by this startup, in order to have all the right licensing and expansion opportunities into Europe. And it was a very, mutual deal, because we knew that the bank was open and wanting to work more in the space. The startup needed a reliable, regulated, trustworthy partner, and we were just able to make that connection. So I think really providing knowledge, infrastructure, connections, support, and also an open ear is really how we support our startups the best. But of course, bigger startups, the big names in the industry, they often have something even like boot camps, for startup. There's a lot of accelerators out there as well. Do check though if they take a lot of percentage away from you if you go through the accelerator. But if you decide that this is the right path for you, accelerators have resources in terms of whole teams of people supporting you and advising you, etc. So there's quite a lot of support out there. But similar to what we just said earlier, make sure that you figure out, what do you actually need from your partner, from your VC, and also ask them for it and make them commit to also supporting you in that way.
Yeah, And when you say they take a lot of percentage, what do you mean? How do you evaluate a startup, especially when it's in the early stage? What does a large percentage mean?
Yeah, it's a good question. And I wouldn't say it's a one size fits all, but in genuine, say that you have an idea and you go through an accelerator program. And of course, the accelerator program provides you with knowledge, resources, potential funding opportunities, a team, right? So you have, I mean, it gives you something that is taking away a lot of work from your end. So fully understandable that there needs to be some sort of return on investment. But in general, you know, if accelerators take 5% or so of your business, for example, with no funding provided, just for the advisory support, or up to 20% of your business, with providing maybe a very small ticket size of funding support, do double check if that's acceptable for you, right? Depending on how far along you already are in your process. If you already have a product built, if you already have a fully fledged out idea, partnerships, you know, contracts with partners that are individual to you, right? That makes sure that you're the only player who can use a specific partner in the market. Those are all things that should give you a higher valuation and give you more leverage, and then might not be accelerator program might then not be, you know, the right fit for you, because you have to give away already quite a lot of equity for work that might already have been done, right, by you and your team. So just research, think about it. I'm sure if you're a founder, you're a clever individual who has a lot of interest in making sure the business succeeds. So I would just say, really talk to the people, think about it, ask clever questions, educate yourself beforehand, and not get maybe too excited. Do get excited, but do get excited with a thinking hat on, about who you give what of your equity away to.
Yeah, absolutely. That's definitely something everyone should do when they give away equity in their startup. Let's not talk about this general idea of a startup. Let's talk about blockchain startups. What makes a startup successful in the blockchain space?
It also depends a little bit on, you know, the startup. Is it a DeFi product? Is it a metaverse, I don't know, avatar making software? Is it an NFT marketplace? Like, what is it, right? So this is, of course, a little bit, you know, specific, the answer to the type of business model. But in general, I think what I've really seen that is different to the generic startup world is community. Having a community, having social currency in a way, being able to attract and engage people in the space that really believe in your idea, that are excited about what you do, that see the utility behind your token, right? And that want to invest their time and money to help you build your brand, because they get a reward in the token and they believe that it's going to be a super, super great way of creating passive income, or being part of an interesting product. So really make sure that you build a community and that you are able to attract people, work with people, utilize the phenomenal, really great people out there that are in the space, that want to, yeah, showcase your startup idea, your token, your mission out to the world through Discord, through Telegram, through events, being a volunteer at conferences. I think that's really big, because the more you see and hear the excitement from other people, it is infectious. And of course, you know, not in terms of scamming, or being or just creating a community with hot air, but it's about making sure that your product is also liked and supported by others in the space, I think that's really a differentiating factor that's quite valuable. But then also maybe a bit more tangible or a bit more of a standard answer that you would expect is, are you solving a problem? And does the problem you're solving really need blockchain technology, right? Because a lot of the time people come to me and they say, oh, so I have this startup idea and I'm using blockchain to verify the origin of something. And I'm like, yes. And traditionally, this verification process also happens. Why do you need blockchain technology behind this? It's a buzzword. It provides you with potentially more funding opportunities, but is that really going to be the future of your business, and necessary for your business to succeed? And that's also something I think to think about when you're talking to venture capital funds that are focused very much, just like my fund, on only investing in blockchain technology, or crypto specific startups. Really just think, is my startup, is it a blockchain native idea, or is it a kind of traditional world idea that is just enabled by the blockchain? And both of it is fine. I'm not saying one is necessarily wrong. I'm just saying really understand which problem you're solving and why the solution you're choosing is the right solution, and having a very good argument for that, ensuring the product market fit is there, right? That's quite important. And then I think thirdly, security. So making sure that if you are a, you know, a startup in this blockchain world, you need to understand and think about security aspects, and make sure that you have really engaged with regulations. Where are you launching? Which country are you launching in? Where are you inaugurating your company? Why? Right? How are you dealing with taxes? How are you dealing with regulations? How are you dealing with employment? Yes, we are a decentralized world, and I hope we're going towards this world. And I'm supporting it with all my heart and soul and knowledge. But we are in a transitionary phase, and we do need to make sure that everything we do is legal, everything we do is secure for our users, for everyone that is involved. So that is an aspect that often is not really touched upon, but I think it's very, very important for you as a startup founder to explore and understand, maybe have someone in your team that looks after security and regulation, just to make sure that you are going to be successful in this space in a long term.
And for me, for example, some people have ideas about blockchain startups in fields that are not regulated yet. Let's say the NFT space. There is, for example, real estate in the metaverse. Yesterday, I saw this meme, something like, I didn't get the rent paid for the house in the metaverse that I'm renting out. What can I do? And it was a joke, basically, because there is no legal grounds on what to do in this case. And I think from my perspective, it's on one side probably cool to start something in an unregulated space because it's still very open and you can do whatever you want. But on the other side, if regulation comes, probably your idea doesn't exist anymore, or is not possible to play out like you thought anymore.
Yeah, it's a good point. And really, I fully agree with that. And that's kind of what I've meant earlier. Make sure that you think about that as a founder, and have a plan B, have a thought process behind it, understand the risks, because obviously also as a venture capital, we don't want to invest in something that might lose the money of our LPs. So we won't, right? Because we also have a very strong responsibility towards the capital that we deploy. So of course, if it's too risky and if you haven't thought about the security aspects and the regulatory aspect of your idea, then it might be quite tough to get funding for it.
Yeah. And Mona, to finish up this conversation, what are the trends from your point of view for 2022 in the blockchain space?
Yeah, so a big trend we're seeing are DAOs, decentralized autonomous organizations. They are very, very prominent, and there are a few trends emerging within that space. Everything from infrastructure players that are providing some sort of template almost for DAOs to start existing. So they provide, help with setting up an entity, or even getting a website working, or all the infrastructure behind the idea. Oh, I want to set up a DAO for XYZ reasons. And then also what I'm seeing, which I think is quite interesting, is the DAOs being set up to gather money and then invest in NFTs. So very expensive, very highly rare collectible items that have a price that is often difficult for an individual to forefront. We're seeing a lot of groups that are coming together that are creating a DAO structure in order to buy big NFTs, and that then creates more business opportunities for NFT marketplaces, for also, for example, law firms or other regulatory security companies to help regulate and secure these types of business models, which are, of course, in our traditional world, a little questionable in some ways, because you are dealing with money. A lot of us are not financial advisors, including myself. So, there are always these aspects, right, in the background that need to be thought through. And we see a lot of solutions popping up in the space. I also, we really do see, NFTs and metaverse aspects exploding. My opinion on that is it's very early for the metaverse related players and gaming related players. It is very early. So our fund doesn't actually invest in that space. We are waiting to see the developments within the area, but there are a lot of startups, like you mentioned, land lending companies, real estate companies in the metaverse, companies that set up clothing shops, or even ways of being able to present your avatar in the metaverse, film production companies in the metaverse. Everything you can possibly think of that's in our traditional world is a version of it, seems to be popping up in the metaverse. Of course, gaming, GameFi, so play to earn, different players in that space are really emerging very, very quickly. NFT marketplaces with fiat on and off ramp to allow, let's say, the more traditional non-crypto native to also be able to buy NFTs just with your euro, your dollar, whatever currency you're using. So there's a huge amount of movement in that space, but we also really focus on a lot of DeFi. And I'm quite excited to also see the opportunities and the developments within the decentralized finance space throughout this year, because I do think that there's a lot of players already, but there's a lot of room for more, let's say, regulated, not necessarily, but more easy to use players in that space as well, which are still decentralized.
Key, right? Usability is key. I recently also started exploring decentralized finance protocols and what I can do. It's a pain with the usability. It's so complicated. Bridging blockchains, it's a nightmare. So whoever comes with a usability solution, I think will be very successful.
Yes, absolutely. That's completely along the lines of my thinking as well. Interoperability between blockchains, usability aspects across DeFi and specific. You know, there's so many things, and I'm so excited about everything that's happening. So yeah, I think 2022 is going to be a very, very exciting year for this space.
Thank you so much, Mona, for your insights and for telling us about the venture capital world.
Yeah, it was a pleasure. Really, really nice to have been here.